Hey all, welcome to Share Trek. This is Raj here. I hope you guys have had a great weekend. I'm having a good time out here, and my real estate practice is also picking up steam. It's becoming a bit busier, things are looking good at my end. In today's video, I'm going to be talking about the indices and the genomic stocks. But first, I want to provide you the background against which the next week is going to start so that it gives you some context for the analysis that I'm going to perform. So let's get started. Welcome back, friends. Non-farm payrolls grew by around 236,000 for March compared to Dow Jones estimate for 238,000. So there is a drop of around 2,000 in actuals versus the estimate. And then the unemployment rate has tickled down to 3.5% amidst an increase in labor force participation. Against expectation that it would hold at 3.6%, while average hourly earnings rose 0.3%, pushing the 12-month increase to 4.2%, the lowest level since June 2021. Along with the payroll gains came a 0.3% increase in hourly earnings, pushing the 12-month increase to 4.2%, the lowest level since June 2021. The average work week edged lower to 34.4 hours. So overall, if you take the 0.3% increase and the drop in average work hours per week, it all comes down to a wash. Market pricing shifted following Friday's report, with traders now expecting the Fed to implement one last quarter percentage point hike in May. Given that the original expectations were linked to earlier expectations that interest rates will be cut in the second half of 2023, and that led to a spurt in the market. Now with payroll and unemployment rates coming a tad under those expectations, I expect the bullish trend to continue to get reinforced. One thing I am cautious about, and I would like to caution everyone about, is that the market has knee-jerk reactions. Reading circumstantial evidence will lead the market to get bullish. However, if unexpectedly the inflation report came above expectations, we can see a sharp fall. The reason market does this folly repeatedly is what I call the quest to be the early bird to get the profits. Everybody wants to buy the shares at the lowest price, expecting that as soon as they buy it, it's going to go up. So in the process, they try to look at all circumstantial evidence and try to project what is going to happen 1 week, 2 weeks down the line. And then they put the money there, and that's why you see the markets going up. So the flip side is that if you wait long enough to see the actual inflation report, then it will be too late because people have already taken their positions, and you won't be able to make any profits because all the increase has already happened. So sometimes you have situation where you say, you see that buy the rumor and sell the news. So just based on the rumor, the share price keeps on going up. When the actual news comes in, that day the share price falls. So you can see all those kind of phenomena. Yesterday we spoke about how rating agencies and analysts are not always reliable. What they think about the interest rate movement comes out of the pressure to retain clients by giving them advance information before the market. Many times the circumstantial evidence used to develop a thesis ends up being faulty, and the market experiences volatility as various participants implement moves based on the analyst's advice. Sometimes you find convincing themes like the ones from ARK Invest that we follow for genomics, the theory that we are in the cusp of a super integration of various enabling technologies like robotics, AI, genomics, and this will lead to super productivity and great profits. The current theme when it comes to inflation is that inflation is reducing. If Fed pushes rates up, then the economy will fall into recession. We need to watch how this evolves. It's very difficult to pick up stocks at the cheap well in advance of a bullish turning point. Now, with all this concept at the back of your mind, let's quickly take a look at the indices and the genomic watch list. Well, friends, here we are in our TradingView platform. Let me say that I'm recording this video on 8th of April at around 8:59 p.m. So at this point of time, the NASDAQ futures are up 0.10%. And as you can see, we are on a bullish phase for the NASDAQ. And this is the bullish line of support. And we are doing pretty well. And also, the momentum is well poised to go up. MACD is coming towards a signal line to cross down on the bearish side, but I feel that on Monday we are likely to go up. Now let's go and look at the indicators. US oil has been galloping up, but it is still within the range that I spoke about last time. It went all the way up, but it got pushed down by twin resistances. One is this resistance, which is at around 82.15, which has been constraining the price of oil all the way from 18th of November 2022. And then we have this other line out here, which is a 200-day exponential moving average, this white line out here. Together, these two have kept the oil price down, and they will continue to keep the oil price down going forward. The only problem we have here, the reason why we had this big jump, is the OPEC oil production cut. We'll have to see how that plays out. So with that said, let us go and look at QQQ. QQQ is also on a bullish streak, and our MACD is looking pretty good, and the momentum is also looking pretty good. And if you go to S&P 500, again, it's the same story. We are on a bullish track out here. There's plenty of room for the RSI before it gets overheated. MACD is bullish. Dow Jones is also looking great. And if we were to look at the VIX, VIX is very tame here at 18.39. And it has got a resistance immediately at 18.57. So I'm going to mark that red. And if you look at the MACD, it is bearish, and momentum is also below average and falling down. So everything is looking good at this point of time. If you look at US dollar index, it's also down. It's in a bearish track at this point of time. We'll have to see whether it moves up. But right now, I can see that the momentum is pretty weak. So there is no reliable stimulus to push it up at this point of time. Next, if you look at established technology companies, I'm going to look at Amazon. Amazon is doing pretty well, and it has got plenty of room to go up. So it can support the market tomorrow. If you look at Google, Google is also doing well, but it has got RSI, which is very close to being overbought, but still it has got a little movement up before it goes sideways. And then Microsoft again is doing well. Again, it's very close to being overbought, so it's got a little movement left in it. And if you look at Apple, Apple has got plenty of room to go above on the RSI. So between Apple and Amazon, they're going to push it up, and I'm neutral about Google and Microsoft. So overall, I can say that there is a 50-50 chance that we will continue to do well on Monday. And now I'm going to look at the Genomic stock, and I'm just going to sort this out so that we have the losers at the top. And SQZ Biotech doesn't look great, and it's most likely to stay at lower level. If you look at Allogene again is also looking very weak with the momentum and the MACD. Caribou Biosciences is looking decent right now because the momentum has picked up. MACD is also bullish. So I'm expecting that on Monday, Caribou Biosciences will be a bit positive. If you look at Illumina, it's still on a bull track, and we got plenty of room on the RSI. But RSI is being a bit flat, and also the MACD has kind of hit a kind of resistance out here, this red line that we see. So I'm expecting that Illumina is going to drop on Monday. If you look at IMTX is again very bearish, and momentum is very low. So it's likely to fall down further before it picks up. So I think IMTX is not going to do well on Monday. PACB is neutral out here, but I think it has got the ability to move up on Monday because it's got this bullish line of support out here. And it has also got the 9-day simple moving average, which is this blue color line, giving it support. The 20-day exponential average, which is giving it support. So these two joint support is making it very easy for PACB to jump up. And also the MACD is bullish, and momentum has got plenty of room. RSI has got room to move before it gets overbought. So I'm very optimistic that PACB is going to do positive on Monday. Intelia is looking a bit weak out here. It has got a support. So it is going to be a very critical test for Intelia on Monday, whether it breaches this support. If it breaches the support, then I think we can see a much stronger fall all the way up to 33.11, which is where the next support is. But however, if it doesn't break down, then it has got a resistance at 36.67, which is this thick blue line, which is a 20-day exponential moving average. And then we are looking at Bluebird Bio. Bluebird Bio has dropped significantly. I have mixed feelings about Bluebird Bio. I know that they have got really good therapies on hand, but at the same time, lower sell getting delayed is putting a damper. And also, they are not being transparent with all the statistics for Zynteglo and Skysona. So it's going to go through a period of trouble at this point of time. And given that the momentum is so low, there is going to be a little bit of bottom fishing. And I think that there will be a little bit of positive for Bluebird on Monday. I'm saying that because of the reason that I already stated to you, and also because from a Japanese candlestick pattern perspective, Bluebird is demonstrating a bullish harami, which means that the next candle that is coming is most likely to go up rather than down. So the prices are going to move up for Bluebird, at least for tomorrow. That's my opinion. Let's go on to Editas. And when I look at Editas, I find the chart very weak, and MACD is also bearish. Momentum is very low. So I don't see reason for Editas to go up. CRISPR Therapeutics is looking good out here. Momentum is almost at 50%. MACD is bullish. And I think we are going to test the resistance on Monday at 46.32, and if we break that, then we are going to have resistance at 47.91. In my opinion, CRISPR is a blue chip at discount. I think it's going to do very well on Monday. Beam Therapeutics is again on a support of 29.41, bullish MACD, but momentum is very low. So I don't know what's going to happen on Monday, because even if it stays above this line of support, it has got significant resistance from the 20-day exponential moving average sitting at 30.25, which is this blue line. So I don't see it having as much support to push through that blue line. So either it goes sideways on this line of support, or it breaches the line of support and comes down. So that's my expectation for Beam. Verve is looking bad on the charts, so I don't have much expectations for that. Bionano Genomics is also looking bad and weak on the chart. And if I also look at Invitae, Invitae is not looking that great, but overall, if the indices are moving up on Monday, Invitae could get a little bit of positives. The momentum is very low, but MACD is bullish. So I'm not very sure about Invitae for Monday. DNA is looking good to me at this point of time, because MACD is bullish and momentum is almost at 50%. And I'm hoping and praying that it crosses 1.45 at least, so that I can be hopeful of being able to sell my shares and salvage my investment. So let us hope for the best for DNA. That brings me to an end of this video. And friends, these are all my personal opinions and the way I am thinking about the shares. It's not financial advice. Please do your own due diligence before investing in shares. I hope you have a great weekend. If you like this video, please do not hesitate to press a like there. And if you feel like supporting the channel, always you can use the super thanks feature at the bottom, and you just click that and select an amount that you would like to support the channel with. Thanks and have a great day. And thanks for being a subscriber, and thanks for supporting me. Bye for now.